Hey there, traders. The market is crashing, and that's what everybody's talking about. But the question is this the big one? And what should we be doing right now? Stick around, because today we're going to dive into what's really going on, and also take a look at, how it could affect your trades and how you can stay ahead of the game. But before we jump into that, I want to show you a chart of Amazon, which gives us a probably pretty good picture of what's going on with the economy. Low jobs, low expectations, and they're even mentioning the big R word, the R word being recession. And so what is going on with Amazon? As you can see, after earnings actually came in on Amazon fairly good, but their projection going forward is a major slowdown. And we see here that it has dropped dramatically, gap down below the 200-day moving average. And that's always a significant negative sign, because the bounce, and so when prices get below the 200-day moving average, it takes a while for them to correct back up. But the more significant thing that I'm seeing here, Anil, is we have had a major break on the weekly chart, a break of this long-term structure that has been in place ever since January of 2023. So over a year and a half of upside. Now we've broken that structure. So how do I want to trade this? Well, I'm certainly not going to, and we try to answer the question. Is it time to buy? Is it a buying opportunity? Or is there a warning signal saying stay out? And I think because we're basically well below the 200-day moving average now, or of course below the 50-day moving average. Notice we had a crossover right here, the 8 crossing the 50 there, and we have proceeded to, after a slight rally attempt, and they're calling this the suckers rally, pow, we get ripped to the downside. And this is happening not just this stock, but also to a lot of the other Mag 7 stocks. However, we did find some light at the end of the tunnel, and we'll be sharing that when we get to the individual stocks. And so with that, let's go ahead and jump back over to this. I want to welcome aboard Anil Parikh. Anil, welcome aboard. Anil is the, let me just make sure I am sharing that. Yeah, Neil is the organizer for the Delaware IBD meetup group, and also the developer of the triple screen stocks picking system. So, Anil, how are you handling this this market madness right now?
Well, almost all but one of my positions are stopped out. And so let the rules handle it. Right now, I'm not seeing much opportunities in any of my triple screen things. So we'll have to wait and see a little bit, except for some opportunities at the bottom.
Okay. And I know you're always looking for the opportunities, Anil, but, sometimes we get, we're moving in. It's almost like this has happened right on cue with the regular seasonality of the market, and where August tends to be a lackluster doldrum type of month, and then September seems to be a down month going into the midsection of October. So it may be 6 weeks before we get some opportunities to actually be a buyer again. We'll see. I mean, you never know. But how do you fill your time? I mean, do you practice your system? Do you go back and do research? How do you fill your time to keep your not only your sanity, but also keep yourself from impulsive or compulsive buying?
I'm actually refreshing my knowledge through reading key items from Mark Minervini's book.
Yeah. Oh, yeah.
And I'm also have some ideas how to refine my triple screen system. So I'm kind of spending time researching that a little bit, see if I can do better.
Okay. And so, yeah, and I asked you that question because it's important for newer traders to know that when the market turns south, you don't necessarily have to be jumping on board, and sometimes it takes a couple of weeks to 6 weeks or more for the market to actually provide you with an opportunity to jump back on. And so, as Anil has indicated, have a plan for what you're going to do when the market isn't giving you anything to do. I do, and I follow the same type of process. I work on books. I work on. I'm right now. I'm actually working on um, um, customizing a poor man's covered call process, which I'm really excited about. It basically it's aimed at people with on fixed income that just want to basically don't want to mess with the market, but would like to generate a little bit of extra income. We'll be talking about that in the future. And so with that, let's go ahead and jump back over into what the heck is going on with the indexes. So first, I'm going to jump the S&P. It's been a wild ride so far, and this, of course, is a picture of the Qs, but also the Qs are in the process of breaking structure to the downside. And so let's go ahead and take a look at the S&P. Well, I'm going to go ahead and show the SPX. We usually showed the there we go. It's looking nasty, folks. Okay, we usually show the spiders, but today I'm going to show the actual indexes themselves. Notice what's happening. Are we coming close to hitting the bottom? Well, when I look at this, I look to my left and notice that, yeah, there was a congestion area here. So that may in turn translate to somewhere around that 52.32 area where we could get a bounce. However, right now, it's looking like we're going to get a death cross between, I know this isn't the official death cross, so no nasty emails or anything like that, but I call it, it's my death cross. When the 8-day moving average crosses below the 50, that's in the process of happening. But I think more importantly is to take a look over here at the weekly chart and see what's going on. I've got a notice. Here's the past high right there, and we are getting really close to that past high. Additionally, because it is the first part of the month, take a look at the monthlies and see what the heck the monthlies are doing. Let me get rid of that drawing. There we go. And notice the monthlies, at least this is for the month, that's a heck of an ugly start for the month of August. But if we close where we are, it gives us credence that we could have a bearish engulfing pattern of the whole month of July. But the month of July's gains were wiped out in actually we were wiped out in 2 days of the month of August. And so, yeah, David, I see the NMTW will yeah, I know it's hovering. It's getting ready. It looks like it's ready for a potential bounce, but we'll see when that's going to happen. And what about the Russell? The Russell was, and when we get over to the NASDAQ is the one that is really showing some interesting things. We'll be there shortly. But notice, immediately go in if you're doing your analysis weekend and take a look at from the high to the low, that was 9%. Now, what's the percentage point where an actual correction starts. Anil, what's I know you know what when a correction starts, it's what down at what percentage point?
20%. I thought that's what that
Did I
said.
say correction? No, yeah, for a correction, it's down at 10%. When it gets into a 20%, that is the territory of a bear market. So as you can see, the Russell, it hit its high 3 days ago and now is dropping like a rock and has already fallen almost 10%. How am I going to play the Russell? Well, it is basically breaking back down. Notice this on the weekly chart. And this is an absolutely beautiful chart on the weekly chart. That is a bearish engulfing that is incorporated 1 week, 2 weeks, and almost 3 weeks of effort. So almost everything, all the profits that the Russell provided going back to July 8th have almost all been wiped out. I'll watch this to see where momentum might start turning around, and that may be down here approximately about we've got a gap right here. So look at 2070 for a reversal point for the Russell. And then last but not least, NDX. Now, NASDAQ, folks, I want to be the first to break it to you. NASDAQ is down 11%, which puts it definitely into the territory of being in a correction. This has been our weakest index for almost going back to mid part of July. While the Russell was busting out to new highs, this has been busting to new lows. Note, and here's the way I'll look at trading that. And we may actually talk about a couple of opportunities with TQQ and SQQQ when we get into the stock selection area. But once we've broken down this way, where we've gotten where we have a cross here, and we are below the 50 and below the 8-day moving average, look for a pull up back into those areas, and it may not get any further than that, about the 18,768 level, for it to the reverse down. Because what we're looking at is one down, one up. That was a short up there. One down, one up, and then one more down to happen by the end of October. So that's what we're looking at for the NASDAQ. Let me erase those things. So, Anil, what's your thought on the and I'll ask everybody, what is your thought about the small caps? Will they continue to lead, or are they going to basically take their place at the rear like they've been for the last a couple of years? So, what do you think, Anil?
I'm looking at the chart for IWM, my triple screen chart, and I got a signal on it. The MACD has broken down. I still don't have a sell signal on it, which is I'm a little bit amazed, but I don't have a sell signal either on daily or weekly on IWM. The story is pretty clear on the Qs and SPY. We got sell signals on the daily for sure. Weekly MACD is broken, so it's a big caution.
So the small caps aren't looking that great, and Jake basically says, "How are you doing, Jake?" Is that small caps are not the place to be if there is fears of recession, and so that's interesting. Interesting time on the recession. Do you think that big deal on the prospective interest rate cuts? Because now from what I'm hearing is that they're actually talking about more interest rate cuts this year than they were originally planning. So it looked like it was pretty strong for at the end of the in September, but it was just going to be one. So hey, if you're feeling lost in these market moves, you know, here's just what you need: the premium AutoPilot trading membership. Take a 90-day test flight, and you'll get access to our phenomenal Flight Path to Profits trading course and our exclusive Discord channel, plus much, much more. You know, it's like having a trading coach, and it's amazing how the people on the Discord channel, the premium members on the Discord channel, we help each other out. And so, hey, with this membership, you're not just getting tools, but you're getting a strategy that works. Sign up for today for a 90-day journey to better trading. But wait, there's more. Anil and I have our top stocks coming up, but that's coming next. So, hey, check out the membership link. It'll be down in the description. And I know some of our members are on the show right now, and so just let us know what you think about AutoPilot trading, if it's good. No. So here's where we're sitting at. Notice I was on schedule heading up, and I'll go back and I'll move this back. I was on schedule heading up, but notice August last year, it basically took a hit. Then through August into September, we started gaining momentum. And this is the way I see my P&L working out oftentimes like this. And so we're still beating the S&P by 4.78%, actually beating the NASDAQ and the Russell again regularly. And so now let's go ahead and jump over. It's time for stock picks of the week. Now, so Anil, you basically said you don't really have a pick this week, but we are going to be talking about TQQ before we finish here. But as far as picking a stock, there's nothing, huh?
No, I don't see one. TQQ, I'm just looking at the possible support it has at the 200-day line.
Okay. And so, well, you know, I've been looking for stocks that basically take the place of NVIDIA in my portfolio, because NVIDIA is just basically getting the snot beat out of it, taken out to the woodshed and beat to death. And so the one that I am looking at right now is, believe it or not, at least earlier today, was Apple. And what's interesting is look how Apple's holding up. The rest of the market is just selling off. So it's holding up really well. And this could be a solid opportunity because, note, we're actually moving back above the 8-day moving average on a little bit increased volume. We just had earnings yesterday. And the thing about the earnings is they weren't really pleased with their revenue affected by the decreased sales of the iPhone. At the same time, though, that despite the Apple's the service sector of Apple actually was a strong performer, and it helped cushion the weak impact of Apple, you know, the actual selling of the products. And so that's very interesting how that works. I think we see something similar with our friend Elon Musk with Tesla, is that the service side of Tesla, it basically helps hold things up. And so, but if you're looking for something a little bit more risky than Apple, then I like the 2-time leverage ETF for Tesla. Now, I'm not going to buy it right here, guys, because it's fallen from the sky. However, where I'm looking at picking it up at is when it gets back into this level. You can get a little box here. When it gets back into, if it gets close to this congestion level right here, that's when I'd be looking at picking up some of TSLL. A couple of things that I like about TSL right now is my momentum is close to the bottom. On the market forecast, I have a 2-line cluster. I just now need a reversal level. So I'm going to put an alert down here about $8.75, about right there. And if I do trigger that, that may also, and then I drop down below that, that may work out for a really good place to do a shakeout plus. If it moves back above that, that would be my trigger to get in. The thing that I want you to be aware of with the TSLL is this, while Tesla moved, okay, once you did the breakout here, it ran up 103% in 16 days. And that's amazing. And so could we get something else going on over here? And also Tesla has a, I won't call it a habit. I'll call it a habit, a propensity to move opposite of what the market's doing. So we'll see how that works out. But right now, I have to get a reversal signal before I'm going to jump on board. But this is one of the top entities on my watch list. If you're an option trader, you may also want to take a look at this one because it does have weekly options. And then Jake brings up also the AAPB, which I think is the 2 times leverage of Apple. Yes. And the only drawback I have on that one, Jake, is that it does not have weekly options, or at least it hasn't. If it gets where it has weekly options, I'll be definitely interested in that. So that's what we've got with the entities. So we've got now for the surprise pick. Anil, what attracts you to TQQQ?
Ask the question again.
What attracts you to TQQQ?
QQQQ, I will have to take a quick look at my triple screen and have to decide based on that.
Okay, because this is one that you had mentioned that you were watching, and while he's getting his triple screen up, I'm going to bring up it's always good when you're looking at the leveraged ETFs. Now, the leveraged ETFs, the TQQ is the 3-time leveraged ETF, and what I'm looking at is I want to be taking a look at what is the non-leverage doing. Now, the non-leverage, as you can see right here, and look to your left, I'm back in a level of support here, and I'll bet you on TQQ, it's actually overshot that. That's part of the backwardation and contango thing that goes on with the leverage ETFs. But I start here, then I start building my case for whether or not I want to be getting into or what the technical picture of TQQ would be. Now, again, look to your left. See that low right there? See how it overshot it? That's due to just how they make up the entities to trade TQQ. So what about it? What is about TQQ that you're liking right now?
The only thing I'm seeing is a possible support at the 200-day line for TQQQ.
Okay.
And if that holds and it reverses from that, it might interest me.
Okay.
It will take a while for it will show up on my triple screen, but MACD reversal could be a good indicator.
Okay, gotcha. So yeah, and Neil, I like this one also. However, I'm going to say I'm going to take the opposite side of what you're saying, and look at this from the situation of being, yeah, because this is a gap down. Now, if the 200-day holds, that's great, but I also want to be aware that where's the 200 on the Qs? It's down here. And so when that's fine, because I've got another level of support right there. But I just want to know that, okay, my Qs are much higher above their 200-day moving average than TQQQ. And so what I'm looking at with TQQQ right now, until proven different, is once I have these crosses like this in place, I'm looking for basically a trip to the downside. Rally attempt, fail, drop. I'm looking for at least one more pullback up into the moving averages. And that's where I would be looking at doing something to the downside. And in doing that to the downside, here's what I would be looking at trading. I'd be looking at trading SQQQ, Anil. And now on SQQQ, notice that it has broken its structure to the upside, which is rare. It's the first time this has happened in a long time. But I would look at potentially trading that off of the 8-week moving average, or to slightly off of, if my 8-day moving average gets up there at that 941 level, that would give me an opportunity to jump on board. How has the SQQ function since it broke out? Well, it broke out here, and it has run up about 33%. So if you're going to trade the inverse leverage ETF, you want to be really, really careful and keep your stop losses. You may have to use a little bit wider stop loss, but you want to be taking out profits when you hit that 15, 20, 25% level. So that's the way I'd be looking at trading it, Anil, on the current market weakness.
No, I think your analysis is excellent.
And so, yeah, I like I said, once I get those crosses, then I'm looking to, typically the price action tends to go in, the series waves going up and down. It follows a process. And so, okay. So let me ask you guys a question. Which of those entities we have TMF? What's TMF, Alan? So, okay, guys, we've covered a lot today. Market crashing, rate cuts, and how to make the best. Okay, thank you, Jake. That's the 3-time leverage bonds. If you're serious about trading, make sure to subscribe and share this podcast that Anil and I do every Friday. And so next week, we're going to dive into another hot topic that's moving the market, and something you need to know in these volatile times. So don't miss it. So, hey, thanks for hanging out with us today on Trade Your Way to Freedom. Anil, as always, thank you so much.
No, thank you. Just share one quick thing.
Yes, you may.
Yeah, I was last weekend, I was listening to some webinars by Mark Minervini and Mark Ritchie. And if I heard them right, over the long period of time, their portfolio growth is about 35%. And yours is about 40. So bravo.
Yes. Oh, thank you. Yeah, we do. Now, is that on a yearly? They look at about 30, 35%?
That's what I heard. I'm not 100% sure, but if I heard it right, that's what they said.
That confirms what one of our members did when he went and ran the numbers for AutoPilot trading for multiple years. And he said that, that was really good. So we need to get the trader line to invite us on. So anyway, again, thanks for hanging out, guys. And don't forget to check out our latest video series on the 12 major pain points of trading. It's a perfect follow-up to today's session. And so, hey, Tim, thanks for that testimonial, man. That was so awesome. Anyway, guys, just remember that all the materials we do present are for training purposes. Traders should always paper trade in our new method prior to the risk of their own personal capital. Past performance is not an indication or promise of future performance. So aloha, Anil, aloha, and God bless.
Thank you.